Welcome back to the show. We got another great one lined up. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back. It's time for XRP Las Vegas. The countdown is on.
The countdown is on to XRP Las Vegas 2025 at the MGM Grand. The markets seem to be stuck in neutral, but positive developments are happening daily. Now is the time to get a better understanding of the evolution of finance and Web3. This is more than a conference. It's a life-changing experience. Go to xrplasvegas.com to get your tickets and see our all-star lineup of industry leaders. Also, builders and developers will have a shot at $25,000 in prize money with the best Web3 project ideas in a Shark Tank-like pitch. We're almost to the finish line. Get your tickets now to the world's largest XRP conference at the MGM Grand in Las Vegas, May 30th and 31st. Lock in.
No doubt about it. Get your tickets, ladies and gentlemen. This is going to be a don't miss event. Look, it's not just about purchasing a ticket. This is about making an investment in yourself. That's what's going on here. And you won't believe how many people have gotten that, and they have done it. And they're doing it now. And I'm telling you to please do it before we have to stop selling tickets. That's the key now. So please get your ticket, make the investment into yourself. The connections, the networking, the relationships you're going to make alone are worth the price of admission over the 2 days. Not to mention, we're going to feed you, we're going to take care of you, but also the things you're going to hear, the discussions, the topics, the features, the things that are explained and revealed to you at this conference are bar none. You are not going to learn some of these things anywhere else unless you're there on the day. I know that because that has consecutively happened in the last 2 years previously. So get your tickets. I want to meet you in person too, by the way. Let me know. I don't want to sleep on that. I love meeting everybody from the audience. It is a pleasure because I stand in front of 2 computer screens 7 days a week and I talk to everybody, but I never get to meet you. And this is my chance. So I hope you will come and meet Caleb and Brown and myself and Digital Asset Investor and so many others. Brad Goldinghouse, David Schwartz, you know who's going to be there. Chris Giancarlo. This is a remarkable event. The Digital Chamber is going to be there. Cody Carbone, my goodness. You know, listen, and then there's Caleb and Brown, and DAI and myself have come together. We have a relationship. You can open up a free account at Caleb and Brown, get institutional custody for retail folks like you and I, and listen to this right here, and a personal rep, ladies and gentlemen.
Caleb Brown has been around for 8 years. We've been helping over 30,000 clients globally. The thing that makes Caleb Brown's client experience unique for high net worth individuals is that we're able to assign a relationship manager to every single client. That means throughout your whole crypto journey, you've got a single point of contact, taking care of your portfolio, understanding your needs, answering your questions, tailoring a strategy that meets you at where you are at.
It's no joke. I was just on the phone. And if you have just technical issues, you can get a customer service rep on the phone for that too. It's unheard of in the crypto space, but not with Caleb and Brown. That's how they do it. Click the link or go to xrpwealth589.com and sign up. Get your free account opened up. Here, gold's starting to get scary. The last time we saw something like this was 1980, right before interest rates peaked at 18%. And you know what I went over in my first video was the 1985 Plaza Accords, which is where they devalued the US dollar to take the stress off of other countries like Germany, France, and Japan. So things are rhyming a bit here. Here's a great clip here. Take a listen to this. Is Dom from Easy A. Dom and Phil Kwok going to be on stage. I tell you, this is going to be amazing. Don't sleep on it. Representing over 1 million builders with the Easy A app. These guys are no joke. They are the real deal. Holyfield. I'm going to tell you that right now. Listen to this. Just in from CNBC. Bitcoin is obviously decoupled from the NASDAQ. He says alts coming next. I'm inclined to agree with him.
Welcome back. Not a lot of green on the screen today, as you know. However, you probably didn't look at Bitcoin. Tanae McKeel did, and she's here. It's up 3%. What do you make of the way that this has been trading? It's decoupled, obviously, from the NASDAQ, which was a trend for a while. How do you see it?
Something that people were looking for all month, because if you go back to earlier this month, it really was trading in line with stocks. It just was not seeing the big, pops and drops that one we're used to seeing out of Bitcoin, and two, it is outperforming the S&P. It has not really caught up with gold, the leading safe haven. But I think you are seeing evidence, not just. I think that the obvious and easy narrative would be that we're talking about Fed independence today, so Bitcoin is kind of acting as that hedge against, political uncertainty. But I also think that it's not just enthusiasm; it's also exhaustion. You're seeing people, investors, wanting to, get back into risk, but just maybe not the type of risk that's tied to earnings or Fed policy.
You got a quick thought?
I do. Look, you've got a president who's very interested, and his family's very interested in Bitcoin doing well, and crypto doing well, and I think you're close to regulation or some positive announcements on policy, and that's what's driving it.
It's evidence, Bitcoin's supportive nature is evidence that we have not had a deleveraging event. Because you have a deleveraging event, everything's going down.
Well, it has underperformed the S&P and NASDAQ overall since the peak. Recently, though, to your point, it is trading pretty well, up from 82 just a week and a half or 2 weeks ago.
Real quick, last thought?
I think one of the hardest things for investors is to wrap their heads around the fact that day to day it does trade like a risk asset, but medium long term it trades like a safe haven. If you look at gold's outperformance, that kind of can act as an indicator of where Bitcoin heads when the dust kind of settles.
Okay, when the dust kind of settles. I like the way Dom's got it that altcoins are next. And there's a post that he put out just yesterday, and this is exactly what he's saying that CNBC is saying today. He was showing a clip here of how $1.5 trillion was wiped out from the U.S. stock market from Watcher Guru, but $60 billion was added into the crypto market, and obviously XRP was green as well. Exactly what he's been saying all along. Decoupling is definitely underway. It's a process, not a one-time event, but looking at the money flows, it'll happen faster than anyone expects. The reason I wanted to show this is because think of the Hidden Road acquisition. $3 trillion is being tokenized and moved on to the XRP ledger. Write that down, right? And you have to remember, as these first movers that start to tokenize their stocks, those stocks are going to perform better than the ones that are not tokenized, because they'll be able to have a new audience that will be able to buy fractionalized positions of it, right? Instead of buying the whole share of Apple that they can't afford to do. They'll be able to buy a fractional tokenized share. So this, I think he's right here. I think he's absolutely right. This thing's going to start happening. It'll be an exponential curve, right? It's going to happen and just escalate beyond anyone's means of understanding. I really do believe that's what's going to take place, but it will be over time. Nonetheless, look at this. Google will debut a new crypto ads policy tomorrow, April 23rd, requiring advertising exchanges and wallets to be licensed under MiCA's regulations or CASP regulatory frameworks. This is what is about to happen here. And believe me, the Googles and Facebooks are ready for it, because what did Charles Hoskinson say?
The new laws that are being passed, like the market structure bill and the stablecoin bill in the United States, and where MiCA is solidifying, what's going to end up happening is the big guys, the Magnificent Seven, are going to come into crypto, and that's going to bring 3 billion users into crypto. You're going to have cryptocurrency wallet in your Android phone. You're going to have a cryptocurrency wallet in your iPhone. You're going to have a cryptocurrency wallet Windows, and they're going to be using stablecoins. It's not because Papa Satya over at Microsoft is like, boy, I love crypto. He hates paying fees.
Exactly. And who's been working on removing fees from the payment system in the payment world better than anybody else? Ripple, right? And not to mention the fact that he goes on to make the point of it's also about the fact that they'll have digital wallets so they can be private issuers of stable coins and they can earn the yield on treasuries.
If you're Microsoft, you got people in 150 countries, and you hate some local bank in Bangladesh or Pakistan or someplace charges you 5% here or 10% here. You want to get rid of that whole thing. So why not pay them in stable coins, Windows to Windows, and you're your own bank. Plus, if they're issuing that token, they could wake up just like Tether does and get $20, $30 billion a year in yield from treasury bills.
Yeah, that's not lost on the Magnificent Seven at all. Buckle up, ladies and gentlemen, because I think now what I just showed you about Don was talking about how we're going to see that transition take place, the decoupling, and that he believe it'll happen faster than people think. Think of the tokenization of the stock market, the bond market. Think about the Magnificent Seven, as it is for this conversation, releasing digital crypto wallets. Why? Because they love crypto? No, because they hate paying fees. And then they'll be able to issue their own stable coin and not only not pay fees, but earn money because you're issuing a stable coin. So they'll earn the interest on the bonds they're holding. Look, when this dawns on everyone, and by the way, I think it's dawned on the Magnificent Seven, they're just waiting for the legislation to be passed. This market is going to move to the likes we've never witnessed, even beyond the internet.com era, I believe. This is a very interesting piece of news here. Fireblocks plus CPN, which is Circle's payment network. A fast path to enable enterprises and fintechs to operate on chain. Okay, this is what's taking place here. So Circle has announced that they're launching their own payment network now. This is very interesting because remember, Circle just announced also that they were IPOing, right? And why do people traditionally IPO? Because it's another way to raise money. Wow, what would they raise money for? Because Circle's getting ready to launch their own payments network. And why would they do that? Because Circle realizes if they don't launch their own payment network, they're dead on arrival. Because all of the other projects and value protocols have learned what's coming. And it's stable coins, which is why Ripple's launching their own stable coin. I'm sure Cardano will do the same. And so forth and so on and so on. All these networks are going to launch their own stable coins. So that means the stable coin USDC needs its own network. Hello, IPO, right? You got to raise the money for it. And what about Tether? What about the largest digital stable coin in the world currently, ladies and gentlemen? What about it? Well, Bitfinex and Tether hid losses of $850 million of commingled client and corporate funds. Uh-oh, that's a big no-no. Now, that's 2017 to 2019 involving fraud, audits, unlicensed money, transmitting. Bitfinex hid losses, $850 million, commingled client corporate funds. This is Tether, November 18, uncovered these funds and had been sent to Panamanian payment processor XRP Corporation without any written contract or assurance, according to the filings of Bitfinex, had been taking millions from Tether's reserve to hide undisclosed losses. Yikes, ay caramba. That is what we're trying to get away from in this space. But hold on. Wait, there's more. Here's some more uh-oh for you and Tether. This here memo endorsed, and by the way, this is a lot more current. This memo here, document filed 4/21/2025. Movant is an investigative journalist with a record of reporting on systemic risk in financial markets, including cryptocurrency trading platforms and stablecoin issuance. Movant recently obtained and has verified the authenticity of leaked dataset, which includes internal communications and trade logs potentially implicating market manipulation and coordinated trading activities among entities associated with Tether and Bitfinex. Say it isn't so. This leak appears to be materially overlapped with evidence currently under seal in this litigation. The public has a fundamental right to understand how systemic risk and emerging financial instruments are adjudicated, and this right is amplified where court records bear directly on alleged fraudulent conduct affecting global markets. This is more no-nos coming in here, okay? This is more no-nos coming in here. Listen, all I'm going to say to this is that I don't know how this shakes out for Tether, but you know, you can hear from the lack of surprise in my voice that, you know, I think all of us get that Tether prints a bunch of Tether, Bitcoin starts to go up, which is what we've just witnessed here in the last few days, even. And then what happens, right? Well, Tether buys the Bitcoin first in the dip, then they print the Tether, and then they put the Tether issued out, and then Bitcoin goes up, and they back the Tether with more Bitcoin. Oh my goodness. Some would say this is absolutely the definition of a Ponzi scheme. You know, I would ask you this question, and I think this gets it about as ground level, and I've asked it before. If Tether was issuing a paper version instead of a digital version of Tether, what would that be called? Anyone? Ferris? Anyone? Circle and BitGo plan to apply for a bank license soon. As reported, Chaincatcher and Gen10 with Coinbase and Paxos are considering similar applications. Well, of course they are. This is what we talked about. A big moment of merger and acquisition, a melding of TradFi with the new innovation that exists in the digital asset space. And this is what it looks like. The exchanges want to become banks. The stablecoin issuers want to become banks, right? And the banks want to be able to become exchanges. You're going to see some acquisitions here. Just you wait. The stablecoin race is turning into the become a bank race. That is exactly what's happening, and it's exciting to watch. The question is what about Ripple? I happen to think it's the new Federal Reserve. That's what I think. That's one hell of a bank, isn't it? And then we have this. Well, you talk about a stick in the mud. Shout out to Eleanor Terrett for this one. The Oregon Attorney General is suing Coinbase, claiming around 31 tokens, 18 more than the SEC originally named, including, by the way, XRP, Link, and Uni, were offered and sold as investment contracts. The lawsuit refers to them as crypto securities. Now, obviously, the Oregon Attorney General doesn't know that federal law supersedes state, right? So there we have that. So that doesn't affect XRP. You don't have to be concerned in that regard. The concern for me is like, can we get the legislation passed? Because that's what puts this to bed, okay? It's enough with the state level attorney generals and judges trying to establish law through the court, which is not the way it works here in the United States, unfortunately. So that won't be happening, but it just goes to show you how badly we still need legislation. But for every misstep, there's a great step. And I do believe this is going to be a great step for the SEC and crypto. And the SEC will start to begin to rebuild its integrity back into the building. As pro-crypto Paul Atkins has officially been sworn in as the 34th chairman of the SEC. And this is his second time in that chair. He knows exactly what to do. And he says here, I'm honored by the trust and confidence President Trump and the Senate have placed in me to lead the SEC. He says, as I return to the SEC, I'm pleased to join with my fellow commissioners in the agency dedicated professionals to advance its mission to facilitate capital formation, maintain fair, orderly, and efficient markets, and protect investors. Together, we will work to ensure the U.S. is the best and most secure place to get it done. There you have it right there. And look what we have waiting as first order of business for the commissioner, Commissioner Atkins. Welcome to your chair. We have about 20 or so ETFs for XRP. We'd love you to confirm just as soon as you get your ink pen ready there. Remember, Commissioner Atkins is also a member of the Digital Chamber as well. He's well versed in crypto. I'm not concerned that we're going to have a Gary Gensler moment tenure again. I think that is over, and I do believe that Commissioner Atkins is going to do the right things and help bring these products to market. And when they do, it's going to be lights out. And here's the latest at bringing these things to market. Coinbase Derivatives has listed XRP futures contracts on its U.S. exchange, regulated by, yes, the Commodities Future Trade Commission. Again, we're seeing these TradFi products be launched and offered directly on the crypto exchanges. We're seeing stablecoin issuers, crypto platforms apply for banking licenses. Soon you're going to see banks want to come in and acquire some of these stablecoin issuers or crypto platforms as well. This is a moment, inflection point that we've been waiting for. And as we get closer and closer to legislation, it's going to take place, and it's going to be amazing to watch. This space is never going to be the same again. Amonic shared this and said, confirmed XRP Giga pump incoming. And I say, with everything that we just went over today, how could we even argue against that point right there? I think the only thing we could argue is whether we think it's going to 4, 6, 5, or $8 or more. I don't know. I'm just glad we're all here together so we can see what happens together. That's what I like. Let's win together. All boats rise. Not financial advice from me or anyone else. It's just my digital perspectives. I'll catch all of you on the next one.